So Tesla stock is falling like a rock and capitulating into the depths of the market, and I want to go ahead and provide an updated video of what we should be mindful of going forward in regards to Tesla stock and the price action going forward. Now, in the last couple of weeks, I made several videos talking about Tesla stock falling down, and indeed, we've seen a lot of selling pressure take place. In fact, I made videos, or a couple of videos about a month ago talking about Tesla stock falling down. So if we take a look at, February 7th around over here when we broke down this area of support, which was previous resistance in the past. I've talked about Tesla falling down from that period. We're definitely down far below from this area over here that I mentioned. And I also made several videos about Tesla when it was at its all-time peak, about how we were at extreme frothy levels and Tesla was severely overextended. But of course, no one wants to hear about a stock being overvalued when it's at new all-time highs. People hear, new all-time highs and they hear this is the time to buy, right? Because people just love buying at the top and selling at the bottom. But let's go ahead and talk about a couple things in regards to Tesla stock, right? Because there's some good things and mostly a lot of bad things, right? So first off, I want to talk about the PE ratio, right? This is just a fundamental ratio that a lot of fund managers, a lot of analysts will look at. It's not really making a discounted cash flow. We're not delving deep into the fundamentals or the books of a company, but just kind of a overview picture of what a company is looking like. And the price to earnings ratio for Tesla is extremely high compared to a lot of its constituents in the Magnificent Seven. Now, I don't have all the stocks in the Magnificent Seven, but we have Nvidia, Apple, Microsoft, Meta, etc. And so basically, we're seeing these high premiums, these high multiples that are being paid for Tesla. And the concern is, you could have something at these high multiples, but it has to justify itself. And we're seeing Tesla stock fall down because it's quite frankly not justifying these high multiples. Now, for someone who's not familiar with this, right, I kind of just wrote in my notepad here, my little sticky notes, what a PE ratio really looks at, right? So PE ratio of 118 means that market participants are willing to pay $118 for every dollar of Tesla's earnings per share, right? So what does a high PE ratio essentially mean? Well, there's a couple of ways you could look at this, right? So it means that market participants expect massive future earnings growth. So they're not buying Tesla based on today's profits, but rather on what they believe Tesla will be in the future and what they will earn. Now, the concern, right, the bottom line is, well, if Tesla's earnings grow fast, then that's fine. You could have this PE ratio of Tesla's growing fast. It'll justify itself, right? So that's fine. Now, the concern is if Tesla's earnings don't grow as expected, well, the stock is going to drop because valuations become unsustainable. And that's kind of where we're at, right? We're seeing the price drop because it has to start regressing back to reality, right? You often see stocks deviate from the fundamentals for a short period of time, but eventually, when you look at things from a long-term picture, right, a long-term view, we see stocks end up coming back to reality with fundamentals, and Tesla was far away from the fundamentals. And also for future earnings, right? Because when we actually look at Tesla's sales, or, I've talked about this in several of the other videos, how, while electric vehicle sales in Europe shot up 34%, in January, sales of Tesla plummeted 50%, right, in Europe. And then in China, it fell down 29%, which, by the way, China is the second largest market after the United States. So this is a huge concern, right? You can't have these high, multiples to pay for a company when the future earnings of them, of what the company is going to earn with its sales of its vehicles, are looking like dog fleas. Horrible, right? So something to kind of just be aware of. Now, I also touched on brand sentiment. And I know people say, oh, it's not brand sentiment, you're crazy. That's just what people from the left will say. And, I'm someone who considers myself more of a moderate, right? I don't lean all the way to the left and I don't lean all the way to the right, right? I just try to have an unbiased perspective, right? And one of the things I'm pointing or have been pointing out is that the brand for Tesla has been deteriorating, right? You don't have people normally just burn charging stations for no reason, right? It's this brand has really been tainted by, some of the actions that Elon Musk has done, right? So we're seeing charging stations burn in Boston just a day ago. We're seeing literally dozens of vehicles being torched in France, right? This is not normal, right? First of all, it's not acceptable behavior, right? I shouldn't have to say that, right? Arson is horrible, but normally when people are kind of against of a brand, you'll have like a boycott. But in the instance of Tesla, we're literally seeing vandalism all over the place, right? We're seeing destruction of property, and we're seeing, Tesla owners, say that their cars are getting keyed. They're putting these horrible stickers. They're breaking the cars. They're flicking them off, right? So this is all tied to sentiment. So sentiment for Tesla has also been deteriorating along with the fundamentals. Now, something else I want to touch on is when price is falling down for a stock, you often see then the analysts start to readjust their, forward predictions for the stock market, right? Because, and I'm sure most people know this, maybe people don't know this. Actually, maybe it's the other way around. Most people probably don't know this. Analysts, especially sell-side analysts, right? So it's a difference from sell-side analysts and buy-side analysts. Sell-side analysts are essentially marketers, and so when a stock is falling down, they just tend to just adjust their predictions for the future downwards, just so they don't look like clowns. And so as Tesla stock is falling down, we're gonna see a lot more of this. Bank of America just slashed its price target for Tesla from 490 to 380. And they're saying that, it's the weakening sales in Europe, again, sentiment on brand, just souring. But this isn't just the first of this. We're going to likely see a lot more analysts come out and say, hey, repeating the same exact information. Because, again, these analysts, they're really just sales people, right? They just try to stir up volume for the firms that they work in. So if they're talking, if Tesla stock goes up, they're gonna raise their price targets and try to look good and stir up demand for a stock that they're marketing, right? That's essentially what they are, marketers. And so we're likely to see more analysts start to slash its prices for Tesla. And the reason why this actually matters, although I say, these analysts are marketers, the reason why it matters is because it ends up being kind of this self-fulfilling prophecy. When you have multiple analysts slashing price targets, well, retail investors will say, oh, well, Bank of America is slashing their prices. They're selling. Now it's time for me to sell. And it ends up being kind of this, again, self-fulfilling prophecy. Now, something else I also want to mention, which, by the way, if you haven't subscribed to the channel, make sure you subscribe so that you don't miss out on my future videos, because for the last few weeks, I've been highlighting where Tesla sits in terms of the S&P 500. Now, just a week ago, I said Tesla was the 5th worst performing stock in the S&P 500. Well, guess what? We graduated, and now Tesla is currently the 2nd worst performing stock out of all the stocks within the S&P 500, right? So, I mean, are we going to take first place, next week? Who knows, right? But we're definitely at the bottom. Now, this kind of, I want to go and touch on things from a technical perspective, because I promise it's not all bad news. We have some things to kind of potentially look forward to. But before we do so, kind of something I just want to highlight that I thought was pretty interesting, kind of deviating a bit from Tesla, but we recently got news that Trump told top members of his administration that Musk was empowered to make recommendations to the department, but not to issue unilateral decisions on staffing and policy. And Musk was apparently also in the room. Now, from the beginning, the whole Doge department was supposed to be kind of this advisory committee, but we kind of have seen Elon be a lot more vocal and kind of more in the forefront than a lot of people expected. And now we're kind of seeing, or hearing sources say that Trump is saying, look, let's take his recommendations, but not give him the same power he had before. And I believe this is partly due to a report that we got today, which was the United States Challenger job cuts, right? So this essentially just shows how labor is looking, and a lot of people trust this source better than the government numbers that we actually get tomorrow on Friday, the non-farm payroll numbers. And what we're seeing is that, job cuts are increasing to a level that we have not seen since pretty much 2020, which we all know what happened, here, right? I'm sure everyone knows what happened here, right? And so pretty interesting, right? And the reason this is concerning is because at the end of the day, right, I always say that the labor market is like the lifeblood of the stock market, right? It's the lifeblood of the economy, because if people lose their jobs, well, guess what? They won't be able to afford to even buy a Tesla. And guess what? Then what ends up happening is then Tesla needs to start laying off its employees. Why? Well, people aren't buying as many cars, so now they got to trim their workforce. So then you have more people get unemployed. It ends up being this domino effect. And then then you got to have stimulus come into the market. And that's when the Federal Reserve starts saying, okay, we're in a recession. We got to lower rates. So then they start slashing rates, and then the cycle repeats itself. It's not brand new, right? It's not reinventing the wheel. Things are just very cyclical in the market, right? And so pretty concerning that we're seeing a lot of jobs being laid off, right? By the way, this report mentioned that most of the jobs were government-led jobs, with so many job cuts in February. So pretty interesting. But now going back to Tesla, right? I didn't want to deviate and I want to go back on tangent. So we broke down this level of support that I mentioned in the past was previous resistance, and through the principles of polarity, previous resistance ends up being new support. Well, guess what? We broke below it. I also mentioned that we were down the 200-day moving average for Tesla, which is a technical problem. When traditionally a stock is above the 200-day moving average, that's very bullish, right? The trend is upwards. When we fall down below it, well, the trend is likely downwards. But what we want to look into is right over here, right? We have the market profile, which measures the distribution of price relative to time. And what we see is that around these areas over here, we see price kind of consolidating. And so this ends up, likely providing itself as a shelf of support. So this is where we could possibly see Tesla kind of sit down and hit the brakes and not fall down as bad as these areas, right? When I was ringing the alarms of Tesla falling down in the last few weeks, I said, look, there's this kind of pocket of price relative to the distribution of time. And I mentioned that when there's price falling down and there's selling pressure around these pockets here, well, that's an area where there's low liquidity, and the selling could push the order books down very rapidly. Well, now we're entering into this period where there's a lot more price that was kind of distributed, it hovered around longer in terms of time around these price levels. And so that's going to end up likely providing itself as another additional area of support. But again, as I often say, you don't want to just buy any random dip, because the dip can always get dippier. It's something I've been saying for the last few years here. Just like when Tesla fell down over here, it did bounce up. Let's actually toggle over to a little candle chart, actually, right? So, line charts can only show you the closing price. A bar chart or a candle chart is going to show you more information, right? Both bar charts and candle charts. But candle charts have been, much more popular in the last few years. So we'll use candle charts, right? So, we saw Tesla stock fall down to this area that I mapped out as in the support. But you don't just buy just because it hit the support. You want to wait for confirmation. And we ended up pushing up, but getting rejected by the 200-day moving average, and so there's no confirmation there. So then once you see that rejection, right, and the white candles are think of it as like falling down because it's filled with sand. The hollow candles, think of it like balloons filled with helium. Once we got rejected over here, that kind of took away the confirmation of an uptrend, and we ended up falling down. And so we're seeing that Wall Street wants to push Tesla down further. Hedge funds are selling a lot of individual stocks at a pace that we have not seen in a long time. But we may end up seeing Tesla kind of start to consolidate around over here. We may end up going into a phase of accumulation, right? And that's where you have consolidation based off Wyclif's phases of market structure, right? So we may end up start seeing the support. But again, the dip can always get dippier, so we have to wait for that confirmation. Anyways, if you guys appreciated the video and the content in this video, before you go, make sure to hit that like button, subscribe, and check out this next video right over here where I talk about line charts. If you haven't seen that video, definitely recommend checking out that video, and I'll see you guys on that next video. Take care, guys.